Hello, everyone, and welcome to the O'Hare Wealth Management Weekly Update for August 11, 2026. I'm Jerry. This is Jody. Thank you very much for joining us. This week, we're going to talk about 529 accounts. I'm thinking of opening a 529 account for my child or grandchild. Is now a good time to start? Short answer, yes. I think we would both agree it doesn't matter when you start. And here's a great chart that illustrates that. Look at a 6% annual return. You're adding $100 every month to a starting amount of $5,000. Across those three examples, it ranges anywhere from almost $54,000 down to almost $21,000. Why is that important? Those are all dollars you do not have to worry about when college time rolls around. And there are a lot of reasons why we believe 529 accounts are excellent choices for education, but we're going to walk through some of the particulars about each of those. But in short, the answer is yes, now is a great time to start. There are a lot of benefits, specifically on the tax side, which Jody's going to walk through now.
So a 529 plan is a tax beneficial education account that you can use for your grandchildren. You could use it for your children. You could use it for yourself. You could use it for a family friend. There are no limits on who you can open up this account for. In Wisconsin, they have the tax deduction of $5,280. There's also a high contribution capacity in Wisconsin. You can put up to almost $615,000 into a 529 plan. On average, the other states do about $300,000. It also qualifies for the annual gift exclusion. So you could contribute $18,000 or $36,000 for married couples. And then you can also do the 5-year front loading, which would be $90,000 or $180,000. And the gift tax purposes would be spread out over 5 years. Your withdrawals, as long as they are qualified, are tax-free as well.
And then that brings us to some of the recent rule changes. There have been a lot of changes over the last few years, specifically with regards to 529 accounts. And one of the most impactful has been the Roth portion. Can you walk us through what that is?
So you can now roll over up to $35,000 of a 529 plan into a Roth. The account has to have been open for 15 years, and the contributions that were made within the last 5 years cannot be rolled over.
And then when it comes to student loan repayment, up to $10,000 per beneficiary plus $10,000 per sibling can be repaid as a qualified student expense. Now, that's the key phrase there, qualified student expense. Why is that important, Jody?
So if they're not a qualified expense, or if there's not an exemption for it, you will have to pay a 10% penalty on the withdrawals. But they have brought in what a qualified expense is. You can now cover your pre-K to a senior in high school up to $10,000 a year. You can cover your room and board as long as you are at least a part-time student, your books, any technology you need. You can even have your internet covered as long as it is required for your educational purposes. They've expanded it to vocational as well. Any accredited program. You could do a mid-year or mid-career, top up on your education. That would also be covered. They have expanded it rather significantly, actually.
Yeah, and I think one of the biggest expansions they have, and this is something that's been there since almost day one, but when you talk about financial aid and scholarship rules, financial aid, if grandma and grandpa, let's use that as an example, open up a 529 for the grandchild, very key metric there. What is eligible and what is not, but more importantly, who can deduct what, Jody?
So as far as FAFSA goes, if the grandparent opens the account does not even enter in as a consequence to any financial aid that you would apply for. And as far as parents go, they have limited, or I think it's up to just over 5% that is counted. So they have decreased how impactful having a 529 account would be on what you can receive for financial aid.
And then with regards to scholarships, what applies there?
The student receives a scholarship. You can withdraw the full scholarship amount without the 10% penalty. You also have to pay the taxes on the gains. Obviously, your contributions remain tax-free, but you do not have to have a qualified distribution for it. It is just the exact dollar amount of the scholarship you received can be withdrawn without penalty.
Excellent. And this, folks, just provides you an overview of why we believe 529s are a great tool. Last week's topic was about the Trump accounts. This is a different way to save money for your child, grandchild, maybe niece, nephew, whatever that might be, but specifically geared towards education. You can learn a lot more. Call us up individually. We can talk about your own individual situation, but this gives you a great overview of why it's important to start now. That takes us to our book recommendation of the month. That would be Why Nations Fail: The Origins of Power, Prosperity, and Poverty. It's a great look. Take a look at the YouTube video that John has put together talking about this book recommendation and why we believe it's one that you might want to take a peek at. On behalf of the rest of the team and Joni and I here, we'd like to say thank you for spending your time. If you have a question that you would like us to consider on a subsequent call, don't hesitate to reach out, either service@o'harewealth.com, or you can call us or email us or send us a text even, and just say, hey, here's something I was thinking about. Would you guys mind talking about it on a future call? Have a great day. Thanks again for joining us.